Hey traders, checking in on the stock market today. Bulls keeping control for the most part, but we're continuing to see these consistent patterns in the morning over the last 3 weeks while the growth rotation has been taking place, and they are nice for putting clear probabilities in our favor as far as knowing which direction to be looking on the morning. I'll also look at some psychological and physical aspects that led to me breaking my flow state today and how to get it back. So looking at the S&P 500 futures, that's SPY. So let's pull up the S&P 500 futures. We have a broadening wedge forming. How? Why? Because we have a resistance break into a support break into a resistance break into support break into resistance break into support break. When it's that choppy and that back and forth, it means scout a rising wedge. Not a rising wedge, a broadening wedge. So here's our resistance line. And here is our support line. And here we are with an hourly equilibrium shaping up, which is likely to form into tonight. Where we've got our high, low, lower high, and we'll scout a higher low as things continue to tighten up. So I'm going to be watching that broadening wedge until it breaks. And essentially it's just showing me the constant rotation into XLF, out of XLF into growth, and just these little gyrations, which on the big picture, you know, when you look at weekly charts, you don't see that. But as these bigger shifts, which take time as they're taking place, it's a bit more choppy on the shorter term time frames. So QQQ, gap up open into a pullback, but that pullback held the hourly uptrend. Our hourly higher low from yesterday was 334.84 support, and we held 335.03. We held that support level by less than 20 cents, but same thing. We're scouting an hourly lower high. And it's just a question of, can the bears confirm an hourly downtrend to lead to daily consolidation? The two most consistent patterns that we've been seeing over the last 3 weeks, and the growth rotation started pretty much May 11th to May 13th. But the pattern since then has been when QQQ gaps up, it is for profit taking. And we see consolidation, and aggressive bears make entries on those gap ups. And just looking at the last couple of weeks, it happened here, and it happened here, and it happened today certainly. So it hasn't happened often, but when that happens, again, if you have that memory and you say, okay, I've seen this many times before, I know what to be expecting, it makes it really easy to say, okay, I am only looking bearish on QQQ if I'm going to be making a trade this morning. And we look at the morning start, and the bulls kept control. But as soon as you see a new low of the day, you can then say, okay, that is now profit taking back down into the gap fill, and that then becomes your clear stop level on the new low of the day break. And then we just had a clear 5-minute downtrend, keeping the bears in full control for the next couple hours. That's one of the morning patterns. The other morning pattern is the XLF higher open morning sell-off. And that one's been even more consistent, where just opening higher leads to morning pullback. And you're not going to see it on all these candles because often that morning pullback is just an hourly higher low. But it was very consistent as far as being a pattern to watch for. XLF higher open, if hourly consolidation hasn't happened recently, look for the hourly pullback. So those are the two patterns that we're going to continue watching for as long as they keep repeating themselves over and over. And again, it's not going to work every time, but it's just enough to shift probabilities in your favor and eliminate half of the equation. I'm not looking bullish on QQQ or any growth names that are gapping up. If I'm looking to make a trade on them, it's only a bearish trade. If I'm looking bullish, I'm looking for an hourly higher low and patiently waiting for it to form. IWM, big time bull flag breakout follow through. We're just looking at the all-time high 234.53 and we're knocking on the door. So again, the broader market as a whole, there are no red flags whatsoever. All we're seeing is rotation, and it is healthy. Something would have to drastically change with massive bear volume for that to change. And we'll see if IWM gets a new all-time high this week. If not, there's plenty of space for a daily higher low to form if we initially reject. Financial sector got real beat up this morning. Not surprising that an hourly oversold bounce took place. The hourly RSI was down in the teens, and we're coming off the all-time high. So an hourly RSI in the teens from all-time high, big time bounce. Daily time frame lost a short-term support, Weekly consolidation underway. And plenty of space. Anything above 34.42 is a weekly higher low. So we're keeping an eye on this consolidation. The bulls will have to change an hourly trend in their favor to regain. And really, we'll be looking back at the all-time high. If the bulls confirm an hourly trend change and get over 38.24, 38.60 is the next level we're looking at. So the bottom line is bears are not proving it at the moment in the financial sector either. We'll keep an eye on this. Could draw it there. We'll see if we back test and reject, but you could also just drop it right down there and have us still within that potential rising wedge. And again, what has been missing, aside from this 3-day period, bear volume. No bear volume anytime in the last few weeks. So the XLF bulls remain strong. XLV had a big upper wicket profit taking yesterday, following through with it, and now it's up to the bulls to try the daily trend change. They have to hold 120.61 and break 123.61 to confirm the daily trend change and confirm a weekly higher low has been set off of EMA 12 support. If they fail and we break 120.61, the daily downtrend and weekly consolidation just continues. So this is the attempt by the bulls to change the daily trend, and they have to get over 123.61 to do so. Biotech sector, big day yesterday. Hourly consolidation today after a little push higher. No clear hourly support after the big bull move yesterday. We had a little level at 132.08, but that's not a significant enough level for me to say it's a loss of the hourly uptrend. And now we're in an hourly equilibrium. If we fail 134.72, hourly lower high, and then we scout a higher low. And if we break 134.72, the bulls keep complete control. Tan stood out weak yesterday, weaker. And again, most names are breaking or testing the high of last week, and Tan is not close. 80.97, so we are still almost 5% away from that level. The bulls are defending, trying to build a base of support, but they have to get over that level to keep this bounce going on TAN. Semiconductors, daily lower high set. Inside bars are often great signals on daily charts. Write this down. Great signals, daily inside bars, and you can Google inside bars chart, guys, and we have a whole video on it. Gaps ruin the setup. I cannot tell you how many times a gap breaking a daily inside bar means look in the other direction. Do not treat an inside bar breaking because of a gap in the same way as you treat an inside bar breaking during regular trading hours. High, low, lower high, and now it's all about 244.80 support. And this is with NVDA not even starting daily consolidation. NVDA had an hourly equilibrium today and is keeping up the pattern of a higher low every day for 7 days. So if NVDA pulls back and if semiconductors go with it, we could lose the daily higher low or the daily uptrend. If we break 244.80, we lose the daily uptrend. It's a weekly lower high, and the weekly equilibrium continues to tighten. Who am I missing? MSOS, another one. Daily inside bar bull break on the gap, zero follow through. So support is 40.70. The bulls must break 42.06 to try and keep this bull move going. Otherwise, sideways. Weekly chart has been sideways for a couple months, and it's remaining that way for the time being. The VIX, daily bear flag confirmed, lack of follow through. Interesting. When did that bounce happen? Oh, the pullback in the morning. So that makes sense. If QQQ confirms an hourly downtrend, hourly equilibrium on the VIX, we'll look for an hourly trend change. Whenever we bear flag without follow through or bull flag without follow through, it definitely gets my attention. So if we were to see the VIX bulls break 1775 tomorrow, it would get my attention as far as keeping an eye out for the potential of broader market consolidation taking place. The dollar, daily inside bar. If it breaks bull tomorrow, our higher low is set, 89.91. If it doesn't break bull, it's still all about 89.66. It's a weekly bear flag, but we have to lose the daily higher lows for that weekly bear flag to try and follow through. Gold. So we were watching for the potential of a daily lower high to be set. Red day today, and we will have to see a bear break of the low of today tomorrow for the daily lower high. And then the question from there is, can the bears confirm a daily downtrend? If the low of today does not break tomorrow, then bulls are just fine overall. Same thing for silver. Silver, a little bit of a weaker bounce. So again, if we drop down and if silver breaks 27.03, we confirm a daily downtrend and further weekly consolidation. So I'm remaining patient, having exited half of my SLV and GLD positions. I'm letting this play out a little bit. I'm not in any hurry to jump right back in bullish because further weekly consolidation may be coming. Miners, look at the clues. What did the miners do today? SPY closed green, I think. It wasn't very notable, but it's not the broader market dragging down miners, and it's not the metals dragging down miners. Are the miners trying to give us clues as to what's to happen with the metals? We are at the low of June 3rd. What was the low of June 3rd for gold? Down here, we're not even close. What was the low of June 3rd for silver? We're closer, but, and they trade different hours. I'm aware of that. So there's some price data on these spot prices of the metals that is not on the miners. But the fact is the miners are weaker than the metals right now. And there have been times where the miners have led in both directions. So it is worth paying attention to. Oil, brief consolidation, 12-hour bull flag. Into continuation. Oil bulls keeping complete control. New short-term support level is 68.47. Natural gas bull break took place. Certainly the setup was there for the bulls yesterday, but it's a bit more pullback than the bulls want to see on the 4-hour here. Still an uptrend. If we lose the 4-hour uptrend with this daily bull break lacking follow-through, it's a red flag. So bulls want to set this 4-hour high or low now and try and make their way back up into the 3 teens. So for me today, started the morning with the ideal scenario with financial sector down, growth all up, and I swung that TLRY position and had a day maker. I exited 40% of that pre-market at my day maker level from where we closed. And then I exited the rest right when the bell rang because I know gap ups are for selling. So just exited right away on TLRY. So I started with an ideal morning, and my account high was right when the bell rang, because from there we saw consolidation and growth, we saw financial sector bounce. So I personally ended up today still green, 25% day maker, still just trucking along, keeping that higher high account going, but I did not have my day trading flow. And by flow, I mean flow state. And if you Google Chart Guy's flow state, we have a bunch of videos about it. But it's essentially just being completely comfortable in the zone. You know, riding a bike can be flow state, playing ping pong, whatever it is, muscle memory. And I have been operating on that level. I can't remember the last time I wasn't. It was probably a few weeks ago. Probably early March is when it was most significantly that I had lost it. But today I had lost it. And it's very clear when you when you go from being flow state to being out of flow state, it is, I gave the example in the chat room, it's like sleeping on satin sheets and then going to sandpaper. It is very clear when you lose it because it's smooth and easy and just bing, bang, boom, and then it goes to just stubbing your toe again and again. And so that was for me today. Just couldn't get it. And it was mostly just a lot of little stop outs, small wins, small losses, break even. Like one of the trades I took today was GME. And I said, all right, GME bulls, it's all about 348.50 as the most important resistance level. And I entered on this 5-minute bull flag to give the bulls a chance, because if they broke 348.50, that opens things wide open back to all-time highs. So I entered on this consolidation and I put my stop under 320, and we ended up, it would have been a day maker if I took profit, but this was the kind of play where I said, I'm either going to stop out, break even, or have a big win. And I stopped out, break even. So that was okay. But again, just a break even trade. Another trade that I took today was, I forget, I had another one lined up. The bottom line is a bunch of, it was Clove, C-L-O-V. And Lori in the pregame show, if you don't watch our live pregame show, Lori handed this one on a silver platter today. And I was playing this drop, and I was looking for a 15-minute high or low. And I entered too early. I was entering at 15-minute EMA 12 support, starting to scale in. And my normal style would dictate entering a position, and then entering a second position, and then putting a stop loss. So I entered too early on my initial position, and my first fill was on a break of 18, and I got filled in the upper 17s. So probably right around here is where I got filled. And then we dropped, and this one right here, I froze. Normally, I make my second entry and I put my stop. And at that point, if I did that, my break even would be something like 1750. I'd exit into this little 2-minute bounce, and then my break even would be 1650, and I put my stop under the low, and I let it play out. That is the ideal scenario, and that is when I'm in my flow state. I do that all the time. In this instance, I froze, and I thought to myself, okay, this is a wild ticker. What if we just keep fading? I hesitated, and I didn't trust that a 15-minute high or low would form. So rather than make a second entry, I just stuck with my first entry, and then by the time we got back to my break even, the 2-minute bounce had already played out, so I was just happy to get a small win. And again, it was a small win, but it was me exiting for a 1% win, which was a 15% day maker. Whereas, and again, it all has to do with psychology, because it's me being, I didn't get as close to the bottom as I wanted. I'm now down a decent amount. It was still under a day loser of a trade, but and then as soon as I get back to my level, it's the psychology of, okay, I can get out break even, I can get out for a small win and start fresh again. Whereas if I had a better entry, set my stop, and let this play out, this is a multiple day maker of follow through. Because from where I sold, we ended up going another almost 20%. So that was just another stubbed toe. Again, I'm not losing a lot, but I'm just not in the zone. And ended up, I think I was red day trading today, but it was my green swing trade that made it a green day. So I posted that in the chat room and said, this is how I'm feeling. And when this is happening, I stop because I'm just going to trade tomorrow and try and get that flow state back. And then someone else mentioned that their sleeping pattern was off. And as soon as they mentioned that, it clicked in my head. And I remember this morning, it was very unusual. I set my alarm at 6:05. I always wake up at 5:45 or so. And I'm wide awake as soon as that happens. And then I usually just lay in bed for 15 minutes before getting out of bed when my alarm rings, as I just transition from the dream state and just take a moment. And today, I woke up at 5:45, but I started doing this fade in and out, where I would fade back unconscious and then come back and then fade back. It was just a really groggy feeling. And I can't remember the last time that's happened to me on a trading day when I'm live streaming. It's been a very long time. And I completely dismissed it. By midday, I had completely forgotten that that was a thing. And the reason it happened, I got perfect sleep last night. I have a really good sleep schedule, but I had started napping again over the weekend, midday. Just little 20, 30-minute naps. The most productive I've ever been in my entire life was TCG year 1, 2, 3, 2015, 16, 17. And I was napping 20 to 30 minutes every single day. And I had my nap game down. And then since moving to this house over the last 2 years, I haven't been a napper. And I haven't been as productive, but nor am I trying to be, because 4 YouTube videos a day is absolute insanity. But the bottom line is, I do believe that groggy feeling this morning and just being so notably different to anything that's happened to me on a morning in the last month plus, and for that to lead to a loss of flow state of my day trading, I absolutely think they're related. And it's just interesting to dive back into psychology and thought process and how is this playing out and why is this playing out, and just observing ourselves, which is key. So sleep schedules are very important, is the lesson and takeaway from me. I'm not certain that that is the reason, but it certainly feels like it. And now the question is, am I going to get back on my lunchtime nap game or not. And that remains to be seen. I'm done talking. Do good things. We'll see you tomorrow.